everyone. I'm Will Osborne with Broad Financial.
And I'm Jason. Nice to meet you all.
Yeah, thanks for joining everyone. And today we are discussing checkbook IRAs and how they can allow you to invest in real estate. So let's dive in. All right. So what is a checkbook IRA? So I like to think of it as an upgraded version of like a standard self-directed IRA. So what it is a self-directed IRA that holds a specialized LLC or trust that allows you to invest IRA funds on your own without getting a custodian involved. So you have real-time access to those IRA funds to easily invest in real estate, pay expenses as they come up, and the LLC has its own checking account where any income that's generated, like rent, gets deposited into. So greater flexibility, greater control over how investments are executed. There's no review process with a custodian, and we'll get into the custodial aspect of all this at some point during the presentation. As I mentioned, direct payment of everyday investment expenses, direct receipt of investment income, and streamlined transactions. So this type of structure is perfect for real estate. And most of our clients, I'm sure you'd say the same, if they're investing in real estate, this is the way they're going to go. They're going to set up an IRA LLC so they have the freedom that the checkbook IRA permits. So
Totally.
let's move on.
So really, why do some investors consider real estate here? So some of the benefits, of course, besides being able to, a lot of people are here for stock trading. Like if you're at your everyday common IRA custodian, for us, we're here to help really diversify with that portfolio. So you'll be able to go ahead, find a property. Hopefully it brings in a decent amount of income for you. And it's just a different way to grow your retirement money. Likewise with real estate, as you know, properties over time hopefully will grow and appreciate. That's up to you to find that property that works best, strategize. And it could be something that's close to your, down the street neighbor's house that, you see it as a great place and it could work great. And likewise, it could be a place very far away in a different state, or we even have some places, different country, it can be international as well. So it does give you a lot of flexibility. And likewise, when it comes down to having a property, the flip side, you want to make sure that it's probably occupied if you are renting it out. There might be times that it's not occupied, and there's not any IRS rule regulation saying it has to be occupied 24/7. But for purpose of bringing in that passive income into the account, probably best that you try to keep things flowing in there, as well as responsibilities for the property. You want to make sure that things are staying up to date. So let's just say you needed to write a check out, pay for some contracting. Like let's just say your kitchen tiles broke, you got to fix something. You are able to write a check directly out of the checkbook IRA just to go cover something. You won't have to reach out to, say, the custodian every single time and maybe pay a transaction fee and wait for processing. That's the nice thing with having this sort of LLC set up. You're listed as the manager. You're able to write those checks and keep it flowing from there.
Right, exactly. And the important thing is to make sure that all expenses are paid with IRA funds from the checkbook IRA, or specifically the LLC.
Totally. Everything from earnest money deposit all the way through the end.
Exactly. So let's talk about some important rules to keep in mind. And really what we're referring to here are primarily prohibited transactions. And we do have webinars on prohibited transactions, one through Madison Trust, our sister company. And this will probably be a natural segue into mentioning Madison, but let's just go into some of the do's. So rental income, if applicable, that's going right back in to the IRA LLC or IRA trust checking account. And I just want to add something. In my experience, most clients who invest in real estate, they're going with the LLC for the added liability protection. Most people are already familiar with LLCs. The trust gets the job done as well. It doesn't have the same liability and protection inherently, but it still gives you the same checkbook control and the ability to invest in real estate. Just want a little side note there. So if I just say LLC, forgive me, it could be the LLC or the trust. But back to the list here. So rent, any income at all that's generated from the investments under the LLC is going right back into the LLC checking account to make sure everything is under the umbrella of the IRA and you're maintaining that tax advantage. All investment expenses have to be paid from the LLC checking account. There's no commingling of personal and IRA cash and assets. And there you go. Keep retirement assets separate from your personal assets. The account holder, the IRA account holder, is a disqualified individual from their IRA. So there's no transacting with the IRA, no commingling assets. Same would go for the account holders' lineal ascendants, like parents, grandparents, lineal descendants, children, grandchildren, and their spouse. And maintain thorough records. So since the custodian of the IRA isn't going to be involved at the investment level, you're going to need to keep thorough records to make sure everything is up to date, keeping track of expenses that are being paid, whatever needs to be done to make sure everything is in good order. That's going to be on the client rather than on Madison Trust, which is our sister company that will be acting as the self-directed IRA custodian. So the Madison Trust IRA is the sole member of the LLC. And because of that, the LLC has the same tax advantage, whether it's a traditional or pre-tax IRA or a Roth IRA. That's how it works. And then the client, the account holder, is the non-compensated manager of the LLC. If it's a trust, they're the non-compensated trustee. So they're making all the decisions, but that goes back to maintaining thorough records. Since you're the manager of the LLC or the trust, it's going to be up to you to make sure you're accounting for everything. So let's move over to the don'ts. So don't use the property. I think it goes without saying. But you're a disqualified individual, as I mentioned, to the IRA, so you can't benefit from the IRA. And as I mentioned, you can't transact with the IRA. Do not use your own checking account or personal funds to pay these expenses. Again, that's commingling, completely off limits. Do not collect rental income personally. Don't even let it hit your checking account and then you deposit it into the LLC checking account. That's enough to be considered a prohibited transaction. So steer clear of that and do not transact with disqualified persons, which I mentioned earlier. Effectively, close family members. That's who you need to avoid transacting with, or they can't benefit from the property either. Don't let them use it, even if they're not paying rent and they're not transacting with the IRA. They can't benefit from the IRA. So
and one thing on that as well. So very important, if you are doing something like this, as I mentioned before, earnest money must come from this type of account. So make sure that you are setting this up early, then probably start your shopping and your hunting for that property. Because if you do find a place and they're saying earnest money, or you got to put something right now to hold it, and this type of account's not set up, your money's not transferred, keep in mind it is not going to be allowed for you to personally cover something. So it is important, set this up, prepare.
Exactly. That's an important point. Glad you brought that up. So when it comes to real estate investing, some of our clients do need financing. And if you need a loan, it's not going to be a conventional mortgage. It needs to be a non-recourse loan. That's a requirement for IRA-owned real estate. And really what that means is, in the event of default, the only recourse for the bank or the lender is the property, and that's it. So that's they can't go after you or the rest of your IRA or your LLC or your trust to satisfy any outstanding debt. It's really just the property that they can take back. But at the same time, this is your IRA-owned LLC or trust that's taking out the loan and not you personally. So for qualification, the bank or the lender, they're just going to be looking at the property to make sure it can generate income. They're not going to be looking at your personal credit score. You cannot personally guarantee anything. That'd be an extension of credit, prohibited transaction. Going back to you being a disqualified individual. So the terms are different for this type of loan than for a conventional mortgage. And at the same time, that brings me to what you're seeing here, UDFI and UBIT. So UDFI stands for unrelated debt financed income. So any net profits that are attributable to the debt financing, that's UDFI, unrelated debt financed income. And that UDFI is subject to UBIT, and UBIT is unrelated business income tax. So it's a tax that's paid by the IRA. And it follows my understanding is it follows the estate and trust tax schedule. So it's a great conversation to have with a CPA if you think you do need financing. By the way, if you do not need financing and you have sufficient IRA cash to purchase a property and pay expenses going forward, you don't need to worry about UBIT. You don't need to worry about UDFI unless you're doing like a short-term rental. We don't see that very often, but it comes up occasionally and it's possible. But if long-term rental or just a buy and hold or, generally speaking, flips, UBIT wouldn't apply. Maybe I shouldn't have said flips because there are scenarios where it can lead to UBIT. But yeah, again, we're not qualified to give really any advice. We're a passive custodian. Broad is the Madison Trust is a passive custodian, and Broad has the same sort of stance from an advisory standpoint. So this is really all just for educational purposes, and consult with your CPA or tax advisor for if you have any more questions about UDFI or UBIT.
All right, so let's go through an example. So let's just say you do have a property, there is a duplex available, and you wanted to get invested in it. That is more than fine. So common situation is we would help you open up a checkbook IRA, given it can be an IRA, LLC, or trust. I know step 2 just says LLC, but really the main goal is, let's just say you do have a traditional IRA or a previous employer 401k. We'll help you move that over into a self-directed IRA, a custodial account to start. We'll help create that LLC or trust on the side, and then we'll help push the money from your custodial IRA account into that LLC, or again, or trust. I'll just say LLC going forward. But that could be a traditional account, could be a Roth account, makes no difference to us over here. And really, that when you do have that LLC set up, there'll be a bank account tied to it. There's a bank we work closely with. We can even help facilitate that setup as well. And really, you'll be able to go ahead and put down the earnest money deposit from it. You'll be able to pay contractors as you need, and likewise receiving income as well. So whether it's monthly rent, paying the other way, so property taxes, water bills, paying for repairs, insurance, maintenance, you'll be able to pay everything in and out. You'll be able to really operate it as your own. It's in the name of your IRA. And just given that you're a not compensated manager, that's a key part about keeping this, clean and available for you. So you'll be able to handle everything. You won't need to call and ask us. And yeah, you can really even own multiple properties. You can, if things go well, you can certainly buy one, rental money grows, buy another property, all through that same LLC. If you have any questions on that, you can always just ask us. We'll go through some real world situations with you, because I know there's many different ways that can pan out.
Right, sure. All right, and when it comes to getting started, again, everyone starts by setting up the self-directed IRA, which would be with our sister company, Madison Trust. So once that's complete, you will fund the self-directed IRA. And the way you go about that just depends on how the account is being funded. So if you're transferring funds from an existing IRA, Madison will initiate the transfer of funds. You fill out a transfer form, Madison takes care of the rest. If it's a 401k rollover, you will be reaching out to your 401k plan administrator, or if it's a 403b or 457b or, et cetera, any employer sponsored retirement plan, you'd reach out to the plan admin, provide them with Madison's delivery instructions. That's all they need to roll over the funds directly to the IRA. And that doesn't come with any tax implications or penalties. And then from there, you would move on to creating the LLC or trust with Broad Financial. If you speak with someone like me or Jason, we send you a specific link for the Madison setup that will eventually send you the LLC application or the trust application, whichever one you prefer. So you get a welcome email from Madison. It has next steps, which includes the funding instructions and the instructions for setting up the LLC or the trust. Once the LLC or trust is prepared, then you'll work with Titan Bank to establish a checking account. So again, Titan Bank is familiar with this type of LLC. They're familiar with Broad Financial. Because of that, the process is seamless with Titan, and we really spearhead the account setup there. You don't need to use Titan. We just make it very simple for clients to start the process with them. You can take it if you need, for example, cashier checks, or you're comfortable with your local bank. Technically, you can work with them if you want, but Titan is a really great choice and a very straightforward and easy choice from a onboarding standpoint.
And most importantly is there's no extra charge to work with them. So we will help with the setup there. Your checkbook there is free. So it hopefully won't really cost you anything to work with them unless you're doing, something abnormal.
Right. And then from there, once the checking account is established, Madison Trust will move those IRA funds from the IRA to the LLC. By doing that, the IRA is technically investing into this LLC, which is why it's not a taxable transaction. It's not considered a distribution. So yeah, funds are moved from the Madison IRA to the checking account, whether that's with Titan or not. And from there, you take over. Once the LLC is funded, you have the ability to invest those funds as you see fit, within the rules, of course. But again, the real value add of having this LLC is the fact that you're placing investments without having to get Madison Trust involved. Without this LLC or trust, every investment needs to be reviewed by Madison Every expense needs to be paid through Madison. So that involves a lot of documentation review, a lot of filling out forms, processing times, transaction fees, etc. So for a lot of people, that's not going to cut it for real estate. It's really
Right.
not even feasible. For other asset types, you don't even need the LLC or the trust. I mean, if you're getting into an easy sort of private placement, for example, chances are you don't need the LLC or trust. But for real estate, it's almost always a must for most cases.
So really a bit about us. So Broad Financial has been around since 2009, so 15 plus years. And even Madison Trust Company being the sister company of Broad Financial, Broad is really just that one-time setup for the checkbook control, pairs with the Madison Trust Custodial IRA, which is more of the ongoing custodial services. Madison Trust has been around since 2014, and they have quite a few clients. So I think over 20,000 clients at this point. Really, their fees are all flat rated. So we'll lay everything out for you. You'll just give us a call. We'll tell you exactly everything. And really, the coordination, it should be very seamless. I mean, you have us being the account executives and fancy words for salespeople will help you get started. And then really, you'll have a very large support team that you'll be able to call, email, reach out to whenever you need. There is one on Madison, there's one on Broadside, and really we'll help you with the ongoing support, of course.
All right, so to recap what we discussed, the checkbook IRA allows you to invest freely via an IRA-owned LLC, effectively cutting out the red tape that would be there without the LLC when it comes to making investments through your IRA. Real estate, specifically rental properties, are one of the many asset types that are allowed in a self-directed IRA, and at least in my experience, it's by far the most popular, rental properties. There's no doubt about it. Financing, you got to think about UDFI, which will be subject to that UBIT tax. So generally speaking, most individuals aren't really thinking about taxes when they are sort of mulling over the idea of investing in real estate or other asset types through an IRA, but it can come up depending on how you go about the purchase of the property. And lastly, Broad Financial facilitates the account structure. So specifically, Broad Financial facilitates the setup of the IRA LLC or IRA trust. And once that entity is prepared, it's handed off to Madison Trust so that it can be held under the IRA. And we're not involved in the investment decision. So Broad Financial isn't involved in investment decisions, and Madison Trust isn't involved in that aspect either. So due diligence is completely on the client. Again, Madison Trust is passive. Broad Financial is really just making all this sort of checkbook control possible by setting up the entity. But yeah, at the end of the day, we're not going to be providing any advice, but just making this an option for individuals out there. So yeah, I think that brings us. Yeah, that brings us to the end. Just thank you again, everyone, for joining today. It's always a pleasure to be a part of these webinars. And if you're a prospective client, you're looking to get onboarded or just have questions, reach out to us. We're happy to help here. If you're an existing client, you can always reach out to the Madison Trust or Broad Financial support teams. But once again, thanks everyone for joining. I really appreciate it.
Thank you. And definitely schedule a call with us. We're looking forward to it.